Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind a couple things. Obviously there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our WebTrader platform. And we'll go over some ideas in terms of risk management. Since we mentioned that at the start here, our order window allows for risk management to be done in a pretty simple way. It calculates your exposure for you, your potential profit based on lot size and stop loss distance, take profit distance. All of that's calculated for you before you ever place your trade. So it really helps on the risk management side of things. And so we'll simulate how that works maybe on one or two trade simulations if we get a chance. Now, to log into our WebTrader platform, you just log in the upper right-hand corner from our main website, and it allows you to trade on both MT4 and MT5 accounts from the same location. And the same is true with our app, which you can download from the major app stores. Now, if you log in the upper right-hand corner here, you'll be in the WebTrader platform. And as we get started with the technical analysis side of things, we probably should talk about the fundamentals just a little bit. Two recurring themes, really fundamentally, that seem to be the two main drivers of sentiment these past weeks and months. One would be uncertainty around tariffs. The U.S. obviously imposing tariffs around the world and different countries, negotiating the terms of trade deals to maybe lower those tariffs or eliminate tariffs in some cases. And things actually were starting to get a bit settled in that regard as some of the major countries and economies around the world had settled into the idea of negotiating the tariffs, and some deals were being struck. Quite a few deals have been struck already. And the big surprise this past few days was a mid-level court in the U.S., a judge that some are saying it's a partisan move in the U.S. if you're into U.S. politics, but either way, within 1 day's time, put in a threat that perhaps all of the tariffs are not going to be able to stand, that the legality of the president and his administration of imposing all of these tariffs without Congress voting and having a say in it. This judge deemed that they're not legal and was nice enough, I guess, to say that the tariffs can stand for now, but in his ruling says that they will need to all be removed, I guess, because he says it's not legal without Congress voting. That was his legal opinion. When I say his opinion, I mean the judge that ruled. And it's like a district level judge. And there's been a lot of argument in the U.S. about someone who has a small jurisdiction in terms of where the court sits being able to rule on things that affect the entire country when it's far outside of the jurisdiction that court sits on. There's been some arguments, and that's been taken to the Supreme Court already in the U.S. as well. And the Trump administration actually won on the merits of that particular argument. But in one fashion or another district judge has kind of stopped, I guess in this case, not just policy of the entire U.S., but it seems to be global policy for the U.S. For the time being, or put fears that it could be stopped. And the Trump administration's in the process of pushing that to the Supreme Court. They're asking for an expedited ruling. They believe that on the merits, that this ruling will be thrown out from the lower court judge, and that the Supreme Court will agree that a president has the ability to impose tariffs for the protection of the financial security of the country, which is what the Trump administration is arguing. And so we'll see how that pairs out. But in the meantime, there's some nervousness on the markets, and we see a lot of choppiness yesterday when the markets opened in the U.S. after a long Labor Day holiday. Monday was a Labor Day holiday in the U.S., so markets were closed. So there was an extra day to think about all of this. And when the markets opened yesterday in the U.S., we saw quite a bit of selling, quite a bit of fear. Volatility index was up very high as the markets are trying to digest what this ruling might mean in the bigger picture, and if maybe the Supreme Court in the U.S. might agree with that ruling or not. The Trump administration basically paints a picture that it will be a huge problem if that ruling is upheld by the Supreme Court, which creates even more nervousness. And so we'll see how that shakes out. I believe the Supreme Court will knock down that decision and view it as more of a partisan decision, but we'll see. For now, the tariffs are in place, but that uncertainty about the ruling and what the Supreme Court in the U.S. will decide has created some jitters. And it seems like the big sell-off yesterday has cooled, and maybe there's a little bit of a bounce happening right now. But there's a lot of choppiness that I've seen on the markets, especially in the equities. That fear has driven up gold and platinum as safe haven metals quite a bit. We can take a look at the charts on those. And then we can also talk about the other big driving story besides the tariff situation. The U.S., it seems, is ready, maybe finally, Jerome Powell and the FOMC committee to lower interest rates maybe sometime soon. After the Jackson Hole conference, if you paid attention to that at all in the U.S., unexpectedly maybe for many, Jerome Powell sounded like he indeed is ready to lower interest rates now after being so much against it for really the past year or so, having only lowered interest rates right before the presidential election in the U.S., which some deemed to have some political leanings as well. And since then has not lowered interest rates, and it has argued strongly against doing so. And now all of a sudden kind of flipped. And at that conference a week or so ago, alluded to the fact that perhaps it is time to lower interest rates. So some anticipation of whether that will happen anytime soon. And at the end of this week, the non-farm payroll numbers are coming in out of the U.S., which is one of the bigger economic announcements in the U.S. And it's once a month that those numbers come out, and we'll see what those jobs numbers look like. But with that approaching at the end of the week and all the fear about tariffs or uncertainty about tariffs and maybe optimism about rate cuts, it creates kind of a whirlwind right now with support and resistance levels breaking through in one instance and holding in others. So not the easiest market to trade right now, but we're going to take a look and do our best to find some opportunities from a technical perspective, understanding that the fundamentals are driving quite a bit of choppiness on the charts. Okay, so let's take a look. Maybe Euro USD, I happen to have the chart up here, could be something that makes sense to look at. Now, last week, we did a trade in the webinar. I think it was Thursday's webinar last week, and we talked about the whole interest rate situation and that there's expectation of rate cuts. And so we went with the euro to break through this resistance level down here. From a technical perspective, if it broke through, we had a pending order to buy, and that was an easy breakthrough and take profit on that trade. Now that we've broken through that resistance, the next resistance level I have drawn on the chart in terms of a larger type resistance is up here. Okay, we see the resistance where the candles are hitting this price and dropping, testing it and coming right back below, hitting and dropping again here, testing and dropping right below this price level up here around 117.30, maybe a little bit higher. So I think where we sit right now is a fundamental move that caused a breakthrough of this resistance where the euro, given the understanding that, hey, there might be rate cuts coming sooner rather than later in the US, those tend to weaken a currency, by the way. The more you cut interest rates, the cheaper it is to get a currency. So the fundamental move here to break through this resistance made quite a bit of sense for the euro to climb against the USD. We have that confirmatory breakthrough, and now we have a pullback today. Some of that fear, maybe that's there today, is maybe strengthening the USD. USD tends to strengthen as a safe haven currency many times. So as gold and platinum have been rising up, maybe the USD strengthening a bit makes sense here. But I think the bigger picture is potential rate cuts. Fundamentally, maybe there's reason for the USD to continue to weaken. From the technical perspective, we do see a broken resistance level here in the last couple 4-hour candles, and a pullback which could be opportunistic if you think this should continue to rise towards the next resistance level. Now, we could take a look and see what's the signal. We do have a technical signal on the Euro USD. It is a buy signal with the pivot line down here at 116.39. Okay, so the technical setup is a buy. The technical signal is a buy, and we can see from the last couple 4-hour candles, here's the breakthrough last week, the pullback with the fear, the recovery, and then a pullback here. So if I was going to go with this buy signal, this pivot line is down at 116.39, and we can draw a line at that level, which I already did, 116.40. So what we're looking at is, if I'm going to respect this pivot line here at 116.40-ish, 116.39, if it drops below there, then that might start a downtrend according to this signal. So we see the support sitting here on that price, and if it drops below there, then that establishes downward momentum, and maybe at that point you look for further downside towards the take profit levels down here, which is the sell scenario on this technical signal. So the stronger breakthrough right now was up. We see it pulling back some. If we go to the 15-minute candles, we can see that more clearly, perhaps on the 15-minute candles. This was quite a rush up, and here we have a pullback occurring right now. So bigger picture, which I like to look at many times on the 4-hour candles, this feels like something that might try to get up to this resistance level where we were at several times in the past days and weeks. And so this resistance around 117.30 is not unheard of in the past week, and kind of might make sense if you're looking at potential rate cuts in the US. So if we then take a look at 117.30 as a potential scalp move to push up towards that price, and the stop loss down here at 116, below 116.40, which would be 116, let's say 35 down here. And it's not the only spot where you could put a stop loss. Depends how patient you want to be with it. This puts us at not quite 2-to-1 potential profit to possible loss, but pretty close. And the only question is, do you feel safe with your stop loss at that level if you are looking to buy? Okay, we've got our stop loss right down here below this support level from the technical signal. And we put the stop loss at 35, which is right about here. Okay, you could be looking at a more patient stop loss, and you want to get below these wicks. So it would have to break all the way below these low points to hit your stop loss. If that was the case, we're talking 116.05 or 04. And in that case, we're looking at slightly larger risk compared to potential profit, but a much more secure stop loss at that point, meaning it would really have to reverse, break this support level, come down, break this support level here, these lows, in order to hit your stop loss if you're putting it down here at 116.04. Okay, and so because there's choppiness and some volatility out there, and we're not so sure about the tariffs, I believe putting your stop loss too close, you have a high probability that you could get hit, even if it is going to end up going the right way here. And at the same time, the ratio here, if you don't like the ratio, you could also put a pending order if you think this could push down before going up further. So pending order just above 116.12 down here or so could make sense if you think this might come down and challenge this support level down here. So there's some options with stop loss. If assuming you want to buy on this, sometimes when I have this kind of situation where I feel like I want to go one direction because of a bigger fundamental story, and that story being really it's expected rate cuts are coming in the US, which tends to weaken the US dollar, but there seems to be some short-term volatility because fear around tariffs, then I feel like I could be sacrificing an easy hit on a stop loss if I put it here, but that maybe within a couple days it indeed could carry up towards that take profit that we saw on the 4-hour candles, which is up here. Okay, so if you get in that situation, you have some options. You can take the risk with your stop loss either closer or a little further away. You could sit it out, obviously, or you could use something that we've used really in our last few trade sets with using AvaProtect. We've used it quite well in these types of circumstances when we know there's volatility on the markets, but in the bigger picture, maybe you feel more comfortable with the direction, even if the timing doesn't feel perfect. And so in that case, you can use something like AvaProtect in lieu of a stop loss to say, okay, directionality I'm pretty certain on, exact timing and exact entry, maybe I'm not as certain. And so you can give yourself more patience by protecting, not just by the hour, but even by the day. So if I do a couple days protection, this gets me through all the speculation for the next couple days about what's going to happen with tariffs. Maybe that expedited decision can get pushed to the Supreme Court in the US to get an expedited decision, and maybe that alleviates uncertainty, and maybe then the euro can more easily climb against what you would expect to be maybe a weakening USD if there indeed are rate cuts coming. So what we do is we get through some of the short-term bumpiness with protection like this without having to risk the stop loss will get hit, because we don't need a stop loss during the protected time period. And then as you get closer to the expiration of the protection, then you can add a stop loss if you so see fit, if the trade hasn't hit the take profit yet. Okay, so in this case, I need to cap my risk with the cost of the protection and adjust the trade size so the cost of the protection is what I'm comfortable risking. And so if I do a 1-lot trade, I'm risking 320. I usually use examples of risking, say, 1% of my balance per trade. And obviously you can risk less than that or more than that, whatever you're comfortable with your risk tolerance. So if I want to risk, say, around 600 or so, which would be about 1% of my balance, so then I could do a larger trade than this. So if I do 1.7 lots or 1.8, then I'm starting to zero in on the amount of risk that I'm comfortable with. So at 1.9 lots, I'm risking just under $610, which is about 1%, just a hair under 1% of the balance in the account here. And so if I'm comfortable with that cost for my protection, then I'm capping my risk at that cost. I pay that up front until the protection expires, and the protection here won't expire until the 5th. It's 2 days from now at 5 p.m. my time. Okay, it tells you exactly when the protection will expire, and you can check on it at any time once you open the trade, and it has a clock counting down, telling you exactly how many more hours and minutes and seconds you have until your protection ends. Okay, so as long as I make more than $609, I profit overall in this trade. And with almost a 2-lot position, that's not hard to do if this thing gets moving like I think it potentially could. If it goes flying the wrong way, fears hit more that, hey, maybe the tariff situation is going to get worse before it gets better, and the USD strengthens and this comes crashing down, okay, fine. I've kept my risk at 609 for the next couple days. Okay, so good potential for profit without having to take on the uncertainty that maybe it'll hit my stop loss before it gets moving. And my potential profit here is about double what it's costing me for the protection at this take profit. Now, because I have 2 days protection, I actually will move my stop loss up to the next resistance level up here. Okay, there's a resistance level we see on the 1 day candles that's up in this area, which is around 117.86. I'm going to give it the potential to go up there because I've got 2 days protection here. So I'm going after actually over 3 times the cost of the protection at almost 2,200 USD profit if I use this resistance level. And if I use the resistance level here where it was at not that long ago, then we're talking 118.16, which is even higher. I'm going to compromise on this, and I'll go with this first 1 day candle resistance here, which is at 117.86. It's a reasonable location if this does indeed get some momentum climbing, and if there's some resolution with the uncertainty about tariffs, that very well could be the case that this could take a run. So the technicals are there. We see the technical breakthrough of the resistance. We see the uptrend. And we see where these resistance levels are up here that we can take a shot to see if it can make a run, hopefully with the fundamentals still on our side with anticipation of rate cuts, etc., helping to cause this technical breakthrough that occurred to continue with its momentum in a hopefully upward trajectory on this trade. I'll pause for a moment. Any questions, comments on what we went over with this trade setup or the protection plan? And if I see any questions pop up, I'll address them as I go. For now, I don't see any. If we take a look maybe at the safe havens, boy, gold has been on a run, and it was so predictable based on the fundamentals. And as soon as we saw the technical breakthroughs, was an easy call to go long on gold these past really week or so. And so as we take a look, ever since the Jackson Hole conference, we just see gold on a tear running up, and platinum has been in a similar situation. Why would they go up if rates are expected to be cut? Wouldn't that reduce fear? And it does. Economically, lowering interest rates tends to reduce fear, except for the fact that lowering interest rates tends to cause inflation. And so one of the biggest safe havens that people run to when they expect inflationary situation, which is what rate cuts can do, is gold or other precious metals like platinum that maybe were underpriced compared to gold. And so platinum's been on a run, and gold now has been running up to all-time highs as well. Yesterday, the day before, today, and it looks like it is not running out of momentum. So the technical signal on gold, if you were following it, you'd have already won. Again, I recommend when you look at our technical signals, you see a nice support level. If you want to take a shot at that technical move, you get your stop loss maybe below the support, or you can go with AvaProtect like we just did on the Euro USD, and your take profit zone is listed for you in the signal, and this has already hit, as it tells you the market has already reached the key level, which is the first take profit line. It's just entering that zone, so the next resistance level is up here. Okay, these take profit lines that are drawn are at those locations, because if you look at the bigger chart, you'd see resistance potentially in the history. When we're talking all-time highs, then there's no resistance in this case. This take profit zone is simply because they picked a certain percent gain to say that maybe the momentum would slow at that point. Okay, and it looks like they were pretty right with this signal, because once it hit this first take profit line, this first key level, it really has slowed just a bit on the smaller candles. It's been sitting there for a bit, but it also looks like it's maybe ready to take off again. On the 1 day candles, it's just a big bull run. If we look at, say, 15-minute candles, you see it has paused a little bit. Okay, it got to this price, pushed down. Got here, pushed down. again pushed down, and now looks like it's ready to break through as this tightens. It looks like another breakthrough potentially happening on this short-term resistance, which then maybe we're headed towards this next take profit line here. So the power of combining the technical signal with the most recent fundamental news, really you can see that here. So we saw the support level form. We understood, hey, rate cuts are expected to come, fear of inflation when there are rate cuts coming, weakening of the currency, typically with rate cuts. So gold has an easier time climbing against the USD, and away it went. So if you combine your most recent knowledge of what's happened fundamentally, if it aligns with the technical signal, then you can filter which signals you want to follow and which you don't. And when the fundamental news aligns with the technical signal like it did here, it's an easy call. Support level, get your stop loss below the support, go with the buy signal, take profit when it hits the take profit zone. That would have been an easy win. Trusting the signal because maybe you felt the fundamental news was on your side with it, okay? i.e. rate cuts coming potentially in the US. So that's just an example of a signal that already carried out, but the point is easy to see. Now, what do you do next if you want to trade on gold? Well, short-term move. If it breaks this resistance level, you could have a pending order up here, because many times if it breaks through, a buy pending order could catch some momentum if this pushes up with some momentum, okay? And examples of breakthrough candles, we can look at them quite a bit, okay? As resistance builds, we see it here. This is just earlier today, resistance, 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 resistance. Once it broke through, you see it carry up in the next couple candles with these breakthrough candles. Then it pulls back and sits right back on that old resistance as support, and up it goes, again building resistance, 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 and it looks like it's trying to repeat potentially what it did right here. Okay, resistance level, breakthrough candles, and up it goes. Pulls back to the old resistance, sits as support, which many times happens, and then goes up and forms new resistance. If that happens again, what we see is a breakthrough, it carries, you could take your profit and then pull back and find support again. And we just see, like a staircase, gold repeating that over and over again. Resistance, 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 breakthrough, pulled up here, pulled back, found support at the old resistance level. Goes up, finds resistance, pulls back to the support, eventually goes up, breaks the resistance, again pulls back. So it's like a staircase going up where it steps up once, steps up twice, steps up a third time, and we'll see if it breaks through. It looks like that's going to happen live for us as we watch a potential breakthrough of that resistance right now. So this is pure technical trading. If you look at only the chart and trade off this pattern, but you can have that much more success if you see this pattern occurring, but also understand there's some fundamental news helping to drive this movement. And those are fear of the tariff situation, driving a push into safe havens like gold, and also an understanding that, hey, the USD might be weakening too. Another reason maybe to run out of the US dollar if they're going to cut interest rates and into something like gold. Okay, and we see that breakthrough happening in real time as we watch it. And so could do a market move and get your stop loss somewhere down below these wicks here. If it reverses back down, then it's a false breakthrough. If it breaks through and carries up like these other breakthroughs here and here, then easy win, easy scalp move. Okay, so this is a textbook 101 scalp trading. If you wanted to try and take a move here to say, okay, it's breaking the resistance, take profit, we can put up maybe 35, 75, something like that. Stop loss down here, 35.60, which is just below the wicks on those candles. Would have to start a small downtrend to hit it. Adjust my trade size to be the amount of risk I'm comfortable with. If I do one lot, I'm risking a little over 1%, 0.9, 0.8, risking less than 1% or about 1%, and you can make a move like that, okay? The idea here is you're trying to combine the technical breakthroughs and the technical moves that are occurring along with what you understand the current fundamental news to be. A couple big driving stories why gold has been so bullish. Now, eventually gold will pull back. Eventually the trend will break. But if you followed this strategy on each of these steps in this staircase on the way up, you'd have had a winner here. You'd have had a winner buying off the support level, trusting the support but not trusting the resistance, meaning you think the resistance will break because the fundamental news is in your favor to break the resistance level. You believe the support will hold because the fundamental news is in the direction of holding the support because you think it will uptrend. So you buy on the breakthrough, and then when it pulls back, you buy on the pullback because you expect it to bounce. So here you'd have had a win on the breakthrough. It pulls back, you'd have had a win buying off the support level. Again, it pulls back, you'd have had a win buying off the support level. Resistance, you don't sell off the resistance because the fundamental news you believe is driving an uptrend. So you have a pending order if it breaks the resistance to buy. Again, you win off the breakthrough. Again, if it pulls back, you buy off the support. Why? Because you trust the support more than the resistance in this technical trend, because it's an uptrend and because the fundamental news supports it. So you can see again and again how many times you would have won just by understanding the fundamental news supports the uptrend rather than the downtrend. So you're buying off the support and not selling off the resistance. You're waiting for a technical breakthrough to buy as it breaks the resistance. And that pattern has been going on for some time on this chart. Okay, we can go back quite a ways, ever since the Jackson Hole Conference. So the fundamental news drove the technical pattern. Okay, now eventually that will stop, right? It's not going to continue to win forever. But once you find a strong fundamental drive moving something like gold or the strength of the US dollar against other currencies, etc., you can take advantage of the technical trend that you see until it breaks, until it stops. Okay, and sometimes it can go on for days, like we've seen here with this trend on gold against the USD, because it had multiple storylines to support that movement. Okay, so identifying the technical trend and also understanding that there might be fundamentals to keep that trend going is the key. Okay, and you can continue to win on that trend until it ends, until you start to see support levels breaking rather than holding. Then the trend is over. Okay, any questions on that? With pairing the trend, reading the live trend, and then also understanding when to get out of it. When that trend is no longer an uptrend and it no longer matches what you think should happen, then that creates enough uncertainty that then it's time to get out of it. And maybe this is the time that it breaks. Maybe it comes down, breaks this support level here and starts a downtrend. Well, then I stop trading on that uptrend at that point. Recheck the fundamental news and try and figure out why did the trend change. But until that happens, you can continue to take advantage of a trend like this, in this case, trusting the support levels and not trusting the resistance levels, which time and again kept breaking again and again. And we'll see what happens here. Eventually, gold will run out of momentum and have a larger pullback. Okay, I don't see any questions popping up. I must be clear. I think this is a good place to stop. We've gone through a couple ideas in terms of trying to combine fundamental news with your technical trading strategy to basically try and get some wind at your back with your technical trading. We looked at a longer term trade using AvaProtect with a couple days protection. And then we looked at a shorter term scalping trade here where we're just trying to take advantage of the current momentum as we see it with the technical trend and trying to match that again with the direction of the most recent fundamental news as we understand it. Okay, great. I don't see questions popping up, so I think we'll stop here. Thank you all for joining. My next session will be tomorrow. We'll spend more time on the fundamentals. We'll look at the economic calendar, some specific announcements, and obviously we'll still look at the technical side to see what the movements are doing, but we'll spend a little more time in the market buzz as well, looking at some articles maybe and some economic announcements on the calendar. That session tomorrow is at 11 a.m. UK time. All right, everybody, thank you for joining and good luck with your trading the rest of the evening. Bye for now.